We're trying to sort of gauge where we're going in terms of the Federal Reserve and perhaps what that means for the U.S. dollar as well. John, let's talk a little bit about how the numbers from the payrolls data that we're getting on Friday could really have an impact or not on these expectations for more rate hikes, especially after what we saw today in terms of the JOLTS numbers.
Yeah, look, I think the big story overnight clearly was that February JOLTS report. We saw, of course, job openings fall to their lowest point in over 2 years. It's clearly a report the Fed watches, and therefore the market watches a lot as well. That's played through into market expectations for Fed pricing. We've seen the probability of a May hike fall from about 70% to 50% overnight. We've also seen expectations of cuts further down towards the end of the year move higher as well. So, we had about 2 cuts priced in for the end of the year. That's now closer to 3. So, when you think about the US dollar, a big source of the strength last year was clearly that rate differential story. That's now starting to compress, and I think that's why we've seen pressure on the dollar over recent sessions. I think that probably continues, to be honest. We've seen, the relative pricing between the Fed and the ECB now at kind of its widest level in quite a number of years. So, look, it's going to be very interesting. We get a whole raft of labour market indicators this week. You mentioned the NFP report at the end of the week, but we also get the employment component of the ISM index on Wednesday, and then we also get ADP as well. So lots for the market to digest and potentially more volatility this week as well.
What about the dollar's safe haven role, and what are we going to see in terms of Japanese yen moves as well?
Yeah, I think it's interesting when you think about haven flows and the structure of the dollar. We went and did a little bit of work recently looking at how the US dollar behaves at the end of a Fed tightening cycle. And since 1980, we've actually seen the dollar rise after the last Fed hike 5 out of 7 occasions. And a big part of that is because you typically see some kind of crisis associated with the end of the cycle. I think what we're seeing this time is, and what will matter a lot for the direction of the dollar and also the yen, is where that crisis comes from. So typically when we see US dollar-centric crisis, that's negative dollar and positive yen. And the reverse being true. So a big part of the next kind of 6 to 12 months will be where that next crisis comes from.
Let's talk a little bit about the yen side of that equation as well. This weekend, Kazuo Ueda officially takes over as Bank of Japan governor from Haruhiko Kuroda. So is this going to mean any change, do you expect, for the future of yield curve control? Let's just start to nibble around Japanese monetary policy at the edges here. And where does the yen head based on that?
I think, over the next kind of 12 months, our view is that the yen should be probably 10 to 15% higher than where it is versus the dollar. I don't think that's going to be a straight line. But I think what we do see over the next kind of 6 months is, again, the market start to increase speculation that there has to be some shift in policy. It is an inevitability. It is just a question of when. So I think, look, the strategy we've been kind of going with recently is kind of selling rallies in dollar yen up towards that kind of 135 level.